Hey guys, you're welcome back to my YouTube channel. This is Synthetic Goddess. On this YouTube channel, I teach strategies to become a profitable trader even if you're a beginner. If you are new to this channel, kindly hit the subscribe button and turn on the notification bell to be notified whenever I drop any video. Also, if you would love to be part of my February bootcamp, check the description box for the link to my Telegram, so that I can give you information on joining the bootcamp. So in this video, I quickly want to do a review on what you should look out for whenever you want to take any trade in the market. So if you want to take any trade in the market, these are the things, the basic things you need to look out for, so that you will be able to organize your thoughts and you won't be looking at different things at different times. So just stay tuned till the end so that you can know what you want to look out for when you want to trade any financial market. This is not limited to synthetic indices alone. You can use it on currency pairs, you can use it on crypto, you can use it on synthetic indices. So the things you just need to look out for before taking any trade. So I'm going to be using Volatility 75 index for an explanation here. I trade the synthetic market. If you would love to register with my broker where you can trade 24 hours in 7 days, check the description box also. I'm going to link some videos because I might be using some terms that you don't really understand in this video. So I'm going to link some of my videos to the description box. For instance, market structure, liquidity, inducement. I'm going to be linking the videos in my description box. So if you are confused about anything, you'll be able to go through the videos I'm going to link in the description box so that you can get it clearly. So what is the first thing you need to look out for when you open your charts? What is the first thing you need to look out for? Now, when you open your charts, any financial markets, when you open your charts, your pair, your instrument, the first thing you want to look out for is what is the weekly time frame saying? What is the weekly time frame giving us? What is the weekly time frame? What is the weekly time frame story? Now, on synthetic indices, we don't really have so much story on the weekly time frame, based on the fact that we don't have a lot of information. Yes, we don't have a lot of information on synthetic indices. Synthetic indices on deriv started not so long ago. I think this stopped at 2020. So we don't really have enough information like currency pair, where you'll be seeing 2005, 2006 and the likes. But here we only have limited information. But with this limited information, you can do a whole lot with it. So what is your weekly time frame saying? Where are we on the weekly time frame? Once you understand the order flow on the weekly time frame, then you don't really have a problem knowing the direction you want to go into on the lower time frame. So once you know your order flow on the weekly time frame, that is going to give you the morale to go to lower time frame and know what you are looking for on the lower time frame. If you don't get your structure, if you don't get your order flow on the weekly time frame, it's going to be very, very difficult trading the market on the lower time frame. So you have to get the order flow where the market is currently in the market. So the first thing is getting your order flow on the weekly time frame. Now, what is our order flow on this weekly time frame? We had a first break of structure to the upside here. This was a break of structure to the upside, and this was the low that made for that break of structure to the upside. Eventually we came back to break the low. This was the low that made for this break of structure to happen to the upside. So this was the low. Eventually we came back to break the low. So we are in a downtrend on this instrument, on this volatility 75 index on the weekly time frame. We are in a downtrend here based on the information that it has displayed to us. We are in a downtrend. So this is it's not going to be difficult you knowing what to do on the lower time frame. So once you get your last break of structure on the weekly time frame, you go back to your daily time frame and know your story. What is the structure of the daily time frame? Where are we in the market on the daily time frame? Are we also in a downtrend? Is the time frame aligned with the weekly time frame? Is the movement aligned with the weekly time frame? These are the questions that you should ask yourself. Where was the last place where we tested properly? Where was the last place we had imbalance? These are all the questions you should be asking yourself on the daily time frame. So here you will also mark out the last break of structure on the daily time frame. Once you get that, you mark your break of structure on the daily time frame. So this is our last break of structure on the daily time frame. We know we are in this range. We are currently in this range on the daily time frame. That is your story. So now you need to get your structure on the weekly time frame, get your structure on the daily time frame. Get your structure right on the weekly time frame, get it right on the daily time frame before you start looking for something else. So the number one thing you're looking out for is structure. You are looking out for structure. Then the second thing you're looking out for is, where was the last place the market tested properly? Where was the last place the market used a good POI to test? Where was the last place the market got into the internal structure? These are the questions you should ask yourself also on the daily time frame. And where was the last place the market gave us major liquidity? So we have a break of structure to the downside here. There was a break of structure to the downside. We had this break of structure to the downside. The market tested this internal structure properly. The market tested the internal structure properly. So this was the last place where we had the internal structure tested, and this movement did not enter into our internal structure properly. It just got to a point and then it started moving to the downside. So this is our last major high. This is the high we are not expecting the market to break to continue to the upside. So if market breaks this particular high, we know we are coming into this area. You can see this sell side imbalance. We have this sell side imbalance over here. So we know that the market might be coming back into an area here soon. So this was the last place we had the POI tested properly, and then we entered into the internal structure properly. So we know we have this place left void. We are just going to mark that out, that this place is marked out void, because the market gave us impulsive movement to the downside, and then the market did not come back into that area to come and use a proper POI. The market just stopped at with a range structure. This is a range structure for us right now. The market just stopped and then it started moving to the downside. It did not have the energy to come back into this area. So this is just our range structure for this particular movement. We are just going to count that as our range structure for that movement. So what else should you be looking out for after you've gotten all of these things? What else should you be looking out for? Now, until market gives you the readiness to come back into this area, don't assume the market is coming back into this area, because as you can see on the daily time frame, this is our last break of structure. So until we break this high, the market is not ready to come back into this imbalance. A market might not be ready at all to come back into this area. So you have to watch out what you actually need from this perspective, from this range structure. You have to watch out what you need from the range structure. You just mark out this place. You just need to mark out this place as a place you are looking out for, when market is giving a readiness. So I have said it. The first thing you're looking out for is the structure. The second thing you're looking out for is the last areas where market tested the POI properly, the places we had our imbalances, or where we have a sharp movement and the market did not come back into the market to come and take. So basically on this daily time frame, this is our last break of structure to the downside. So we are in a downtrend on the daily time frame as well. So that has solved a whole lot of cases for us. So you've watched out for your structure on the weekly time frame, on the daily time frame. So what else should you look out for on the markets whenever you want to trade. So the next thing you're looking out for is areas of inducement, where you are expecting market to induce, where you are expecting market to take before using your POI. So once you are able to get those areas of liquidity, it will be very easy for you to pick out your POI. So you are looking out for areas of liquidity. Remember, we spoke about inducement, secondary inducement, primary inducement. When we have a first break of structure, that is where we are going to be looking out for our primary inducement. So I'm just going to do all of this on the higher time frame so that we don't get to narrow down so much to the lower time frame before we understand what we are doing. So basically we had our first break of structure here. So where is our inducement on this time frame? This is our primary inducement for this particular time frame. This is the primary inducement. So we had this break of structure to the downside, and where is our secondary inducement? So we'll have to narrow down to 4 hours time frame to get our secondary inducement. Okay, to get our secondary inducement, we'll have to narrow down to the 4 hours time frame because it is not bringing it out on the daily time frame. So this is where we had a start of our secondary inducement on this time frame, on this 4 hours time frame. So we're just going to mark this out, and then you can see we had sell side imbalance. Okay, where is it? Okay, the market is trying to adjust itself. So we had a start of our range structure here, which is our imbalance for the secondary point of interest, and then you can see we had sell side imbalance here. So the markets might probably be using areas like this. So the next thing you're looking out for is your POIs. Since you've been able to mark out your inducement, your POI should not be hard for you to mark out. So I have even marked out the secondary point of interest the markets might come back to be using. This is the secondary point of interest the markets might be coming back to use. And if the market violates that area, we know we are coming to our first break of structure, where we are going to just take out the inducement and continue to use this area of interest to continue to the downside. Let's go back to the daily time frame. Okay, where we are just going to use areas like this to continue to the downside. We might be using areas like this to continue to the downside for the primary point of interest. Then what is the last thing you need to look out for after you've looked out for your structure, your POI, your inducement, your liquidity areas? The next thing you should look out for is entry and entry confirmation. Like I would always say, a POI can become a reaction zone without confirmation. A POI can eventually turn to a reaction zone if you don't have a confirmation. So you're looking for an entry at a POI. Remember, this POI is just a range structure POI. We still have an imbalance here. We still have deep imbalance here, so we might be coming down here. So if you don't get entry and entry confirmation here before you jump into the market might just lie you and break that point of interest and move to this imbalance area, because it's going to drag it back. Markets will drag it back to this area. So you have to be very, very cautious when you are trading the market. Always wait for entry confirmation before you enter into the market. Don't just jump into the market and expect the market to move in your own way. Like I said, the first thing you're looking out for is your order flow on the weekly time frame, on the daily time frame. After your order flow, you are looking out for areas where the market tested properly, or where you have your major liquidity. Then the third thing you're looking out for is areas where the market will areas of liquidity in the market, like I marked out the secondary inducements, the primary inducements. So once you get your area of when you get your areas of liquidity, the next thing you are looking out for is your POIs. It's going to make it very, very easy for you to mark your POI. Once you mark out your POI, all you need to do is patiently wait for the market to get to your POI and give you entry and entry confirmation. Once the market gives you entry and entry confirmation, then you can enter the market. I've made about 3 videos explaining entry confirmation, so you can also check my channel to get the entry confirmation, to know the entry confirmation you are looking out for. Your entry confirmation can be on the lower time frame, and if you are a swing trader, you can narrow it to 1 hour time frame or maybe 4 hours time frame, depending. It all depends on you. It all depends on your trading strategy. So just make sure you are getting your entry confirmation right. It's going to help a lot. So guys, that's going to be all for this video. I hope you've learned 1 or 2 things. Kindly drop me a comment in the comment section if you're confused about anything or you have a question about anything. I'll gladly reply you. Have a lovely trading week, guys. Keep living in the atmosphere of profits. See you in the next video.